So it's interesting to see.
You brought up the employment thing, and I just did in a recent Wealthologist Weekly, I talked about this, which, employment growth over the past 5 years, I think it's been the majority of employment growth has actually occurred either from government or from medical or healthcare, which is highly correlated to government when it comes to job growth. It's going to be interesting because, just in this first couple of days, we are hearing about that shrinking of the U.S. government, which means less job growth in that area. And it's going to be interesting to see, does the private sector kind of sop up that job growth or not? So we'll pay attention and find out.
Well, and I think that points to the expectation of a little more of a cyclical market, which just I know that's a technical term, but just means more volatility. So I think just preparing for more of a bumpy ride. But let's pull up though we've got that jobs slide.
Yeah,
so I think this is pretty interesting, and this is just kind of reiterates the point that I just made about the labor market and jobs being so important. What we're looking at here, and this was some research that Goldman Sachs did, but it's basically letting us look at the estimated impact or effect of a 1% unemployment rate increase. So if we saw, and now again, 1% is a pretty big number. I think right now we're sitting right about 4.2, 4.3%.